sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over my usual updates: Bitcoin, Ethereum, Cardano, stock market indices, and then just a handful of altcoins. But to go ahead and get it started here, the main focus here for the update on Bitcoin is going to be this chart. First thing I want to go ahead and point out is, again, down here looking at our stock RSI along with these three green boxes in this general approximate range that has been reached each time according to this Fibonacci channel, essentially down to the golden pocket zone. After that, we then print this bullish divergence with respect to the price each time, as you can see up here. The slope being negative here on this 2 weekly chart. Essentially, I mean, it was very minorly negative back here. It's borderline flat at this point. Very clearly negative slope in terms of the support on all three of these, more clearly being right here on our current bottom. But outside of that, here more for the price and its harmonics. With each of these little three bubbles right here, with the model being up here showing this is the entangling. This short period, this window of time where each time you can see each of these bubbles got the last drop off to end the bear market, was the entangling of these moving averages up here: the 50 EMA estimated moving average, 800 EMA, 5 EMA, 13 EMA, and the 50 EMA. And then again, as I have mentioned multiple times in the past, the current phase that we're on, which began at the March crash into our current time, well, not my bad, to correct myself, the current phase we're on, which is phase 1, started back here at this top 2017 to our current time. We're about 3/4 into the way of the phase 1 of the current cycle system. If you're new to my content, first video and the number of videos I've linked as cards, so I'll be more clearly going over what I mean by the phase and what cycles and how I describe that. But the way that we have, when you take current price action in regards to previous price action and comparing the certain phases, we look most similar to the bear market we've seen in this phase 1 of this second latter half, so being the super cycle. We're basically getting the next occurrence of what we saw from 2012 to 2013. That's what we've seen from March to these high right here to this bear market, which lines up. So we're essentially somewhere right in this area, waiting to see this last thrust towards the upside. But catering towards the logarithmic decay and the lengthening of the cycles, etc. What this phase specifically did is it pretty much carbon copied, if you were to go back here to this previous phase, so this being the phase 2 from 2013 to 2017 and that high. We get this ABCD down here and we see this M at the bottom, then we eventually start to go back up. That's what we saw right here. We see this ABCD into this M pattern right here. We're going to go back upwards, and then this little kind of like check mark area back here just essentially lines up with the double top that we saw within our most recent price action. But going after, so once we get these the entangling of these 5 moving averages with respect to each of these, we see the same thing right here, but the price harmonic structure was a little different for this this more the beginning of the current phase 1 we're on, leading into 2018 towards the March crash. But likening back to 2015 in our current time, you can see back here we got 21. So from the point where the red moving average crossed below the it's either the 50, I forget which one, it's the 50 estimated moving average. When the red crossed below that right there, that's when we see the same thing right here at our current phase. Go out 21 bars, 294 days. Going back to this one, this is when we jumped back above both of the white moving averages, so the 50 EMA and the MA, so the moving average. Assuming, given structural similarities, the vast structural similarities we've seen so far, also seeing the 11 bars from, so when we see the yellow moving average, you can't really see it on here. If I zoom in, you'll see it more clearly. It's the 5 EMA, so it's the one right here. We get that cross below right here, so leading into the blue into the white right here. Take that out to to the cross right here of the 50 moving average and the 800 EMA right here. It's 11 bars. We go back to our current one up here, you can see again same thing happening right there. So assuming once more, as I was saying, we continue to see similar fractal-like just price harmonic structural performance going into this next bull market. What we'll see is, again, akin and according to the two, so either the black one or the white one right here, being taken from March crash forward, again likening back to the super cycle thing that I mentioned earlier. We'll get a quick boost up in price here soon. It will take us no higher than around 32 to 33,000, I have had to guess, and then we'll solidify price essentially, as you can see right here with these, again, these two white moving averages meeting. We'll have price come above it and then meet back on it to find support according to those fractals. And that's, again, as you can see what happened right here. These two white moving averages, the 50 MA and EMA, are converging. So we're seeing right here, again, pretty self-explanatory. The price will jump up above it in order to continue to meet that criteria. We also did nicely down here with this 200 moving average and the 200 estimating moving average. I assume if likely if I had the ability to carry on out, so this two moving average range right here, it would likely perhaps maybe even follow through with this bottom range back here in 2014 and 15 occurred at the very least on this uppermost 200 EMA or MA, or just like it did right here, we actually, you know, came within the actual range of it. So again, another likelihood just to kind of confirm the price action we're seeing, which brings us to this chart here on the daily. Again, we've broken, as you can see up here, the 16-month long resistance. We came down and we've approximately, essentially, not directly retested it, but close enough. We've came up, we've set this these two tops right here. Not necessarily a double top, could be a double top according to like right here and right here if we actually end up breaking down further. And like as I mentioned, maybe this is a bull trap. We come back down to our previous lows in this area, or we continue to go lower and set newer lows according to the various confluence ranges we could find in this general more micro descending support, or, you know, going down towards this more macro, which lines up with, let's see, this chart right here. We'll descend down into this turquoise support range as low as around 12, pretty much 12 or 13 to 12,000. But going back to this chart, we could likely come back down and retest it once more. This is so basically overall, which then brings us to this chart here, so this 12-hour chart. Either we will continue to trade within this flag pattern, this upsloped ascending bull flag essentially that I've been talking about in my previous videos. Either we will break down, maybe we'll see like a fake out or something. That could be a chance and we go back towards the upside. Or if we do break down, if that fake out significantly starts to go below 20,000, 19.5 thousand, then likely, unless it's just like a super severe like fake out, we're probably going to go down towards the previous lows, maybe even lower. But if we continue to find support right here, again with these two blue boxes, lowest one worst case scenario, also lining with the 200 EMA here on this 12-hour chart, we are coming down to find the overall support lows we've met each within this, essentially this upslope flag so far. One thing I do want to point out, which we're finding on Ethereum and essentially Cardano as well, but Cardano's price hasn't behaved as well as Ethereum and Bitcoin so far and recently. But I find, personally, I'm seeing a lot of similarity between these two ellipses that I have down here and the way the RSI is formed. So it basically, obviously, clearly, it's just alluding to that we would see the next thrust towards the upside, which kind of just generally lines up with this white pattern, and also more clearly the turquoise line we see right here, leading up towards no higher than around 33 approximately, as I mentioned. Basically seeing, you know, just a typical type of bull flag that would be like an ABCD pattern in nature if you were to draw it from the first flagpole to wherever it bottoms out at to make the, you know, the breakout with respect to the actual originating flagpole. But overall, I think things are looking quite positive. Again, at the end of the day, anything could happen. and overall it is just 50-50 whether or not we're going to go towards the upside or the downside. But I do think personally things in a bias sense are more geared towards the upside. So especially when we look at Ethereum here again, so you have the two circles back here, the two circles up here, pointing out the same similarity of the ovals I mentioned there on Bitcoin. If we continue to break down lower here, perhaps we can see a fake out as low as to around 13 to 1200 or so. I would say that would pretty much, that would be, if we lose that, that's worst case scenario. But above that, we could find some support around 1400, I would believe. There's actually one more thing I believe I wanted to go over. Okay, yeah, so it was on this chart right here. So the other thing that I want to go over for Bitcoin here, if we look at this RSI, so you can see each of these. So for this first green box right here, essentially leaning up towards the top right here, we enter our bear market, we enter our lows with RSI, come up to this green box, find an intermediate relief rally basically. Basically the idea with the green boxes is each time essentially when price solidifies trading or just velocity above around 52 here on this weekly chart and maintains that area, you can see each time we get the bull markets or at least a relief rally with each of these. And once we get entrenched back below that in like an underwater type of zone towards the lowest range of this blue range right here, typically denoting the bear market, which we can liken back to right here. You can see the most similarity on this chart would be from 18, so January of 2018 to January of 2019 was similar to November of 2021 to December of 2022, given these are more technically, according to the structure of Bitcoin going back to its inception, more technically actual bear markets in and of themselves, given how the RSI forms and how low it goes. But right now you can see, again, breaking out of the 60-month resistance up here on the price. We're so far we've solidified being above 52 on the RSI. Hopefully we'll continue to do that. The RSI is also seeing the ramp up towards the upper range. Again, if you go back and just compare it each time, it needs to be up here to have positive acceleration along with that bullish velocity. But the big thing that I want to point out here, again, just to further reiterate, taking into account in terms of the price and where its lows are in terms of key macro retracement and resistance back essentially to the previous cycle top back here at around, it went around 15.5 up. That's pretty much, it's still, it obviously went a little bit more into, it didn't find perfect support right exactly on, 19.6 to 20,000, but essentially this little blob right here, this is where we found support, which is, a fantastic place to see the price retrace to. But if we go to, so this goes all the way back to February of 2021, lines up with the first of the double tops we set recently, 69,000. And as I mentioned this in the previous videos, this green strip is basically, it's pretty much the 0 point range, with the dotted line being the actual absolute 0 point. In terms of this being a momentum oscillator, basically, in general way, MACD flips are kind of like usually macro indicators in terms of when the macro momentum is going to shift. Again, I suppose it all depends upon how you have it actually with like your settings and whatnot. But anyways, we can clearly see here that we've been pretty much trading in a triangular formation, like a tornado, as I mentioned on this channel. Analogy to take with, especially with the MACD, but in general, even with the RSI stock and the price itself. Just kind of think about this is, you can see clearly, like I said, a tornado, like a coil winding up, it's converging, it's building up all its pressure to a specific point. Once it hits that specific point in time, towards a general breakout point of a triangle, usually before the apex, we're going to take it from here. We're going to have that pressure release that it's been building up. Given everything, and my own personal bias that I've gone over in this video, I believe it will break towards the upside. I think it looks primed to do so. Hopefully, what would be best case scenario, what we see here is we come down, maybe even go a little bit lower, I don't know, just in general we find support along this area right here, and then we continue to actually go towards the upside. But another thing that I want to point out is, and again, you can kind of just see that this green strip along with the absolute 0 point is essentially just like the magnetic zone of pretty much all the trading of the MACD. It's kind of like it's return to median, it's return to cool down. It builds convergence around that point up into a specific point in time, cooling down before it builds up all of this, in quotes, cooling up that it's been building up. But another thing that I want to point out was, with the way that I have this twirl, or this whirlwind drawn specifically, as you can clearly see on here, going back to how I mentioned just M's and W's being fundamental to price harmonics, and even just in general, just even when it comes to the stock, not the stock, but like the RSI and the stock RSI, M's and W's are very nice to see. But you'll see an M with respect to this first loop, and then we see a W right here, intermediary, and in intermediary fashion. Then we see another M right here with this loop, and we see another W intermediarily. Then we see an M right here with a W in between. As I mentioned, sometimes you'll see M's that form like this. This is actually technically what Bitcoin did do, going back here to this area right here. We came up. What we were doing is we formed an M, we formed this little W right here, and then we went towards the bottom we're currently at right now. But going back to this MACD, again, as I pointed out, what we will hopefully end up seeing here is with this final M, kind of this third iteration overall, we'll see this final breakout. We'll see a retest of, you know, the major point of gravity, essentially, is another way to think about it, which is why I liken it to like a magnetic. It's being magnetically, technically it's not magnetic, it's dielectric attraction, but that's besides the point. Maybe we'll come up and come back down and retest this range and go back up. But in general, the idea is things, for the most part, if I have to say it, I mean, obviously everything that I say on my own opinion is my bias, but I feel like, I mean, I try to be as objective as possible. I feel like this is more clearly leaned towards the upside than anything, but once more, again, I mean, anything could end up happening. But another thing that I want to point out here is essentially mimicking the way that the price actually formed as well. Take a look here at the price specifically. What we see, we actually go back down, so to have them both at the same time, we see this drop right here, then we see basically this major M towards our low, like this, essentially. We'll see the same thing here on the MACD. We'll see this right here. Make it a different color. We'll see this initial downside, which lines up right here, then we come up, come down for the MACD, lining up with this area right here, come back up, got rejected within this triangle in the MACD, came back down, and then this right here, so we set the low, going back to 17, 18,000. Prices, obviously, as I've been pointing out, having a negative slope, whereas the MACD's been building upwards the entire time, which should obviously be hinting at some form of momentous bullish divergence on the MACD itself. But here to go back to Ethereum. Again, essentially it's the same picture here. This is clearly the same picture that I got going over for Bitcoin on the 12-hour to the daily. So really not much to go over here. It hasn't broken into its 16-month resistance once more. So that is another milestone to see. In general, seeing Ethereum with volume support push above 18,000 will likely be a signifier for it. If you take a look here at Cardano, as I said, it hasn't been behaving as well. It's broken down outside of its rough flag that it's seen so far, but it still in general is overall just forming this kind of increase of, you know, I mean, like a lot of flags will do, they'll come up and they'll make an M. Again, this all just kind of likens back to an ABC type of formation, and how those will typically play out. Because, I mean, at the end of the day, almost all the patterns are just one pattern, and they all like different faces of one pattern. Now, hopefully that makes sense to you, but outside of that, if Cardano specifically, if it starts to lose, it comes down to around 30 cents and then loses 30 cents and then loses essentially 29, pushing 28 with significance, likely going to initiate down towards the previous lows, similar with Bitcoin and the idea I mentioned with that. Here for the stock market, the SPX, first thing I'm going to do is go over here for this 4-hour for the New York Stock Exchange. I've been going over more specifically recently. Again, we're just still up above this 16-month or 12 to 16-month resistance right here. So far we've come down and we've tested it. Either we will find support, continue higher from here, or we'll enter the decoupling like I've been mentioning in my previous videos, and we'll see this essentially what I believe will be we're heading into the next 2008 market crash. Here, if you look at the SPX on the monthly, it's essentially the same picture here. We can see we have broken out of our 60-month resistance, 12 to 60-month resistance of the yellow dotted line. Currently, this monthly candle, as you can see, our current one, it's so small that you can barely see it. Very small body. It is just ever so slightly out of this resistance. Again, essentially the same picture that's here. Just, I mean, you can think of this New York Stock Exchange essentially as SPX. They look nearly identical. So again, I believe we'll likely see a similar scenario here. But for example, if the New York Stock Exchange starts to significantly push above 17.5, likely the SPX will be doing as well, and it's going to probably go up towards the upside. But I mean, again, at the end of the day, I mean, perhaps we continue actually to go up here and the stock market sets a new high, but maybe the stock, like for example, the RSI prints a bearish divergence, and then this dump that I'm talking about like initiates later. I mean, obviously, again, I could fit an infinite number of paths on here, and only one of them is going to be taken. So, I mean, who knows? This here is just the NASDAQ. Again, essentially the same idea with this this support that we see right here. This is on the weekly, or not the support, but this resistance we've seen. We broke out of this more akin to the closer towards the bodies of this descending trend so far. We've broken out of that. We're about in the midline of it. Got rejected off this more uppermost to the actual two highs back here of this final top. So the NASDAQ could come down and find some support around 11.5, 10.5 thousand or so, and then continue higher up, kind of like this green pattern, akin to this white pattern here for the New York Stock Exchange. Or again, given these are all just stock market indices, we'll see, like I mentioned, just a major crash similar to 2008, as low as here for this, maybe even down to $3,250, which does line up with essentially coming down and just so slightly pretty much reaching the midpoint of the 786 to the 618. But I mean, if we were to go all the way down to the lowest of this box, so this support right here, which lines up with the type of drop that this type of crash would see, given like even a lot of news media have been talking about a 2008-like recession, and it could even be worse, which, I mean, if it's worse, it could line up with this 0.618 as well, all the way back there for a prior macro retracement. But so here for XYO, I've been mentioning on my community tab, big update for this. This is the daily chart. I did recently, I've been mentioning kind of just on the USD to XYO, or the XYO to USD, it's been more kind of trading in a more so horizontal, symmetrical-esque triangle type formation. If you go to the XYO to Bitcoin, you can see right here again, it's been mentioning, it's more of a falling triangle, falling wedge for the XYO to Bitcoin. We did recently see a drop here for XYO. Perhaps this is likely going to be a fake out, and what we'll see here is, since we've gotten a spike back up, and we are currently sitting literally right within the horizontal line associated with the climax. I'm forgetting the specific term. It might actually be climax, but they're the apex of the triangle here. We could maybe perhaps trade sideways. I mean, this coin was trading sideways a lot throughout this triangle. I mean, you could really not even call this a triangle pattern. I mean, honestly, for all intents and purposes. But here on the XYOST, if we continue to come back down lower, and obviously go below the lowest low, we set around 0.0048, essentially approximately half a penny, I'd say right now, losing worst case scenario, 0.0038. If we start to close candles below this box, essentially, not probably going to be too good. I mean, worst case scenario, we could find support somewhere around like with this area back here at lowest around 0.0035, 0.0043. So again, approximately half a penny. Again, just kind of within the midline of this box right here. Would probably be a nice area to come down to if we were to continue to go lower. Perhaps the price would go lower, but the RSI doesn't, and it prints like a bullish divergence or something along those lines. Obviously, again, many different routes could be taken here. I mean, if we were to come down, like for example, if the market sees a bull trap or something, we could come down and retest this overall macro, what was resistance. We could then flip it into support more so than we did back here for this test back here once we initially broke out, which would line up with us retesting the previous lows. Could possibly be a setup for a nice double bottom. But the main update that I wanted to go over was every now and then, obviously, I have to update the fractal patterns that I use, and with respect to the overall macro pertaining to the entire cryptocurrency market harmonic structure that I see in terms of its price when you liken it back to Bitcoin and the phase cycles that I was mentioning and whatnot earlier. So just to kind of get it off quickly here, the main update is that, as I've been mentioning, like $2 to $3 for XYO, according to what I came across recently, given the time elapse and the sideways trading of XYO and the kind of pushing back of Bitcoin almost in a way, which, I mean, it should be expected given the things are going to lengthen over time as it matures in price. But basically the whole point is that the further in time that both of these two tops up here are pushed back, the more XYO is going to be worth once it reaches its all-time highs, because the further in time that the two tops for XYO pushed back means that Bitcoin will have progressed further in its next upcoming bull market, which goes back to the XYO to Bitcoin chart. This one specifically right here, this weekly. The tops for this XYO to Bitcoin chart get pushed back, and the highs for Bitcoin are also going to be higher. The price targets are going to be higher as well. So according to that, again, like I said, $2 to $3, but could likely see it push towards $6 to $7. Again, in general, I would say just to be safe, to mainly just look out for like the $2 to $3, lowest like $1.50, $1.75, like I said, kind of in this bubble. This bubble ranges from about $1.80 to about $3.50. But as you can see right here, assuming similar structure given the phase and whatnot that we're in within the overall market cycle, if you want to take with my analysis more than a grain of salt, which, I mean, it's honestly all a gamble at the end of the day, right? But we see this crash right here. I mean, this would in general kind of just be a good place to take profits anyways, because there's going to be a rather big crash. And it might not, if I had to guess, it probably won't be this drastic, like a 94. Obviously, it's not going to drop 94% mid bull run, or obviously towards the end of the bull run. It would probably be more like, for example, it's essentially going back to this right here, and this dropped 63%, so it could likely drop more, like something like this, go from like $2.50 more down to like 70 cents rather than all the way back down to 14 cents. So I mean, obviously, as I've mentioned fairly often, these fractal patterns aren't too precise scale, they're to approximate scale to kind of help guide the ebb and flow, because I mean, at the end of the day, the price could move out of time phase with this fractal pattern, but it could move in unison with the price, meaning like it hits the same price right here, but it hits it earlier, as I drew with this upswing right here. So hopefully I was able to explain that well there. I kind of stumbled a few times saying a few of that because I was trying to make sure I got it across correctly. But the last thing that I'm going to point out here for XYO is, again, this massive drop we could see, which goes back to this one right here, this weekly XYO to Bitcoin chart. Let's say that Bitcoin dumps one more time, or maybe XYO, given it's an altcoin, is just going to see a final dump to meet more, again, these lowest most range to kind of more line up with the low that it set last time. And actually, we're seeing vast similarities. So this lowermost pattern right here is actually taken from right here, previous bear market leading into the bull market, only bull market we've seen for XYO. And then this one right here, obviously you can see the exact same ABC D pattern with an M, then a bull market. It just happened over a shorter period of time than the first one. But this one lines up right here, as you can see, leaning into this A, B, C, and then we form this kind of this choppiness like an M right here, and then we get that bull market reversal towards the upside. But here for Phantom on this 4-hour chart, right now we are continuing to go down, obviously. Right now, for the most part, it's all these altcoins. It's really, it all just depends upon what Bitcoin's going to do. If Bitcoin's up going down in the stock market, etc., obviously these are going to continue to go down. But right now, I'd say Phantom's biggest obstacle is essentially holding around 32 to 35 cents right now, approximately getting entangled with this 800 EMA here on this 4-hour chart. But if we here go to JASMY, again, right now we're coming kind of to the midline support. I would say outside of this area right here, the best area of support we built up was back here that we're now coming towards the top of. Could come down around around approximately half a penny. I would say if we start to lose 0.0035, it's not going to be good. If we look here at theta, again, similar picture. Seeing a pretty big dump down to this actual lowermost ascending range, which goes right back to the macro lows we've set so far back here from approximately December, beginning of 2023. So starting to lose 95 cents, especially down towards 88, 87 cents. Likely not going to be good here. Insinuating like bull trap, maybe the bear market's not over yet, etc. Here for TRIAS, given TRIAS has been performing rather well. It broke out of this pattern we see right here, this kind of sending almost wedged in a way with this median right now that we're coming down to meet. Also, it's very nicely almost coming in direct unison with the 800 estimating moving average right here, essentially at $2. So $2 would be the next area to find support here for TRIAS. Also just in general lines up with this sideways action we see right here. Next area is going to be right here at $1.70 essentially, about just $1.60, $1.70. If that gets lost, it's likely, you know, like I've been mentioning, perhaps bear market's not over. In this entire time, maybe we've been seeing a bull trap. Here for Doge on the daily, you can see with these 3 pink bubbles coming down, and we're meeting this 0.0, just a little bit higher than 7 cents that I was mentioning leading up to now. We are getting a pink vector candle, and this is the daily printed, so you can see we got a pink vector candle back here, and then during our lows back here, lowest lows, we got the pinks printed as an onslaught for that massive and brutal drop that we saw. So this could be a good thing we're seeing here as well. We are getting bullish divergence on the MACD. We're probably, we use all these on the 4 hour, so I mean these really don't even matter. I wanted to go Doge over Doge on a higher time frame again, just to continue to point this out right here and how we're, I mean it's almost, I mean it looks almost identical. Again, well this area right here is I have this circle back here on this previous bear market range. That's pretty much where we're in right now, where we're kind of exiting this ascending white rectangle. This Dogecoin is just really has, in my personal opinion, uncanny trading in terms of it being just similar to how it just has a nice rhythm and harmonic to it, essentially. Basically, if we start to lose the approximately 0.072 right now, next area is going to likely line up with the overall macro like low range we've set going back to the actual lowest low, which would range anywhere from around 6.5 cents to around 0.063. So I would just say, I mean around 6 to 6.5 cents. Retesting the lows, bull trap or whatever. Maybe the bear market's not over and, you know, this thing dumps down to a penny. Who knows at the end of the day, but right now, Doge needs to see movement above 9 cents, further on to 10 cents, breaking 10 cents, finding support. And then again, like I've just been mentioning pretty much for last few videos, most major place to find breakout above is 13, 14 cents here for Dogecoin. Here for CRU, again, as I mentioned in the previous video, we have this white trend line range of these dashed trend lines. It's the macro resistance, akin to the 16-month resistance I've been mentioning for like Ethereum and whatnot, but this is over a shorter time period. It hasn't been out as long, but the most macro resistance. Haven't met the price target yet of this. If we were to look at this as a falling wedge, would bring us down to around $1 on the dot, just about, which if we were to come down and still meet this trend line, this uppermost trend line range, would approximately meet this price target, with seeing some deviation down around maybe 96, 97 cents. We could likely end up just finding support approximately around this 200 estimated moving average, so this white one right here as well, and bouncing towards the upside. But I would say the nail in the coffin here for CRU would probably be to start to see with volume support significantly losing around like 80 to 75 cents. Here for Algorand, Again, seen a pretty brutal drop recently. Worst case scenario, we continue to come down lower and we start to significantly break 20 to 19 cents. After that, final milestone would have to be around 18.3, so around just approximately 18 cents. Then the next place is the lowest lows it's already set. Again, maybe the bear market's not over, etc. But obviously right now 30 cents is important. We need to start to solidify trading back above 23, 24 cents for Algorand. If I go back to CRU, right now starting to see price movement back above around $1.80 would be with the volume support, etc. You know, come back and above it, just with the price in general come retesting it to find support eventually as well. Here for MATIC, it's also, I think this was similar to, similar to THETA. Similar to THETA and how it's kind of just essentially, I mean, it obliterated this ascending support we've seen going back to the lowest lows. It is printing pink vector candles though. This is on the 12-hour chart, so this one's a little bit more viable. We took a look at, if you take a look at the MACD, it's getting a bullish divergence with respect to price. Obviously the RSI is heavily oversold. It is essentially more oversold than the lowest price low we set back here, but not as oversold as this previous prior of this double bottom we saw back here, the macro low we set back here from December to the beginning of 2023. So that's also another good thing to be seeing, is the fact that the RSI is super oversold right now compared to, I mean, RSI is in the same territory that the previous macro lows were in for all of these coins I've been going over, yet the price is still above its macro. It's flipped its macro resistance. Most of them have. They are printing, a lot of them on the higher time frames. I only went over the 4-hour for a lot of them, but are printing in these pink vector candles, insinuating this. And again, like I said, MATIC on here is getting this MACD bullish divergence, but which again could at the end of the day mount up to be nothing. MATIC is finding the 200 EMA as well right now, also meeting this 0.618, so this golden pocket range right here, the 0.672 to the 0.5 with respect to the macro low, to the highest high, relative high we've set as we broke out of this red line, this macro resistance right here as well. But that was about all that I really wanted to go over in this video today. So hopefully you guys enjoyed the content. Hopefully you're able to take away something and learn something from this video in an educational format. But outside of that, everything being said, I hope you all have a blessed day.